Well, next we're going to have on the agenda, there's a California data analytics update with Jocelyn over at Headset. Just a little bit of backstory. We entered into a partnership with Headset that's pretty exciting for CCIA members, where we're going to get sort of some smaller data bites per month in the weekly insider that goes out every Friday to all members, and we're going to do a couple other cool things, and they get there's a full sort of member-to-member discount for Headset for active CCIA members, and you can check all that out on the website under the member-to-member discount services, but I think we also have just sort of a news announcement about it. So we're definitely excited to be able to have this opportunity to be able to get this high-level data to our members included in your membership and included in your weekly emails. So I'll go ahead and start the screen share here, and we'll jump in with Jocelyn over your headset. So happy to have you, Jocelyn, and
Awesome.
Excited to hear the update.
Yeah, I'm happy to be here. I see a lot of friendly faces or names in the participant chat. But okay, so I was thinking about it yesterday, Justin, and as I was kind of finalizing everything, we should do some type of I don't want to put more work on everyone's plate, but if we wanted to do a survey, and the more that I know what all of the members want to know what's going on, then the more I can kind of, tailor content and provide applicable data. And so for today, Justin, if you want to just go to the next slide. I figured what we do today is I'm going to go through just some high-level trends of what have been going on in California over the last year. We'll look at some projections through 2022, and these are going to be more US projections. And then I'll talk a little bit about some categories that we're seeing some interesting things in, like the vape category and pre-rolls in particular. And then I'm going to try to pepper in a little bit of my, just for those that I haven't met, at Headset, I'm responsible for really a new market expansion. I do a bevy of different things here, but I'm kind of boots on the ground in all of our key markets throughout the US and Canada. So I'm watching all the data, I'm studying the markets from that perspective, but I'm also talking to people that are running different associations, building brands, retailers. So I feel like a good perspective kind of on the market from what's actually happening outside of the data. And then in my personal life, my partner has been running a cannabis concentrate brand in California that was in Prop 215 through Prop 64 days. And so I'm going to try to pepper in as much of my personal kind of, I try to normally stay away from providing personal perspectives because I want the data just to speak for itself. But I just feel like it's also really important to have some context around the data. And so I'll try to kind of pepper in some personal experiences as well. But before we get into it, it's important that you understand what we do here, how we collect the data. So Headset, is a cannabis data and analytics company. We're providing 3 different softwares, essentially, that's used by retailers and brands to either understand their own data or understand market level trends. And so Justin, if you could go to the next slide. So this is, I'm not going to spend a whole lot of time here. We'll send these slides out, but this is our data process. I want everyone to understand this because, again, this is really important as I'm going to be going through these trends. So essentially what we're doing is we're pulling all of this data directly from the point of sale systems in dispensaries throughout the US and Canada. We're pulling it from 2,000 plus different dispensaries, or about 2,000 at this point. So what we do on the back end is we're collecting all of this data. We're very simply put running a bunch of different methodologies that's really a combination of humans to go through and cleanse and normalize all the data. We're using robots, AI to really project and forecast up what each market is doing, as we're seeing a sample size of around, let's say, a 20% pool of each state or Canadian province. We're then forecasting that data up. So in California, our projections that we compared to quarterly state tax data, we were off by less than 1%. So the data is as accurate, as it can be for the market. It's a very strong sample of data. So yeah, so that's a little bit about our process. So next slide, please. One more. Okay, so this is just a snapshot of what sales have been looking like, adult use sales from 2020 all the way to date. So what I want to point out here is, obviously, in 2020, we're maturing as a market, right? So we're going to see much stronger growth rates. The less mature we are, the newer of a market that we are. And we see this across every state, every province, right? So we can see here, our growth rates are much stronger early 20. what I want to point out is we see right here, this is, summer of 2020, this is when the vape crisis hit, right? So we saw that the market as a whole in California, sales started to decline. But not too shortly after, we started to see, sales rebounding. And then we really started to see things pick up again. We did over 433 million in sales in the month of June. So our growth rates are, again, not as strong as we saw last year, but we're still growing as an industry. So this is all positive. Next slide, please. Okay, so this is a snapshot of what our category spread looks like in California over the last 365 days. So I want to point out a couple things here. So number one, don't be scared. We're in July. This is all real-time data. So, this is not a major dip. But what we see here, a couple different things. All right. So flower is going to be in orange right here. Flower is currently making up about 40% of our sales in the state. The vape market, which is going to be in light blue up here, is around 20% right now. And I'm going to touch on the vape market in a couple other slides. Sales have been rebounding. So when we are looking over here in July, October, this was closer to 16% of our sales at that point. So they have been rebounding slightly. Another thing I want to call out is our third largest category just a couple months ago was edibles. Which we're seeing here in red. Edibles at the start of the pandemic, we started to see a shift. Obviously, people are much more, concerned about respiratory issues. They're home, so they're looking for more of a discreet way to consume. So we started to see edible sales grow really at the start of the pandemic. And this was our third largest category of sales in California. That was just surpassed not too long ago by pre-rolls. We've seen a big shift in pre-rolls. So now these two categories are kind of neck and neck at this point. So pre-rolls are going to be here in yellow. So I'll point out right here. And pre-rolls, we're seeing some interesting things, which I'm going to touch on in a few more slides. I get hit up from a lot of beverage manufacturers, and so I wanted to touch on one thing with beverages. So beverages are going to be right here in this, darker blue. Beverages are about 1% of our total sales in California. We read a lot about beverages in the media because obviously this is a really new, exciting category for a lot of consumers. There's a lot of interest from larger, more traditional companies that are looking at the market. But the number one question that I'm asked from new brands or traditional CPG companies that are coming into the market with this enthusiasm around beverages is this perspective that it's growing so rapidly, and I don't want to say that it's not, but beverage sales are a very small percentage of our market, and it's a pretty challenging category to build a product in. So I just felt like it's important to kind of show everyone like the reality of what's going on with beverages. At Headset, we're very bullish on beverages. We'll start to see growth in a few years, but anyone who is making a beverage company here in California knows it is very hard to get distribution on retail shelves. There's a lot of consumer education that still needs to happen for the beverage category to really take off. But regardless, very exciting that we're just seeing these new kind of more categories that are going to help us destigmatize and are getting more media attention. So I just wanted to call that out here. Next slide, please, Jay. Okay, so the vapor pen market. So what we're looking at here is sales in the US and Canada. So sales are going to be for US are purple, Canada is going to be in red. And this is going to be from January of 2018. So obviously, being that, we just legalized around that point, we're going to see this growth right here, which is just happens in any market, right? Vape is the second largest category in general in most markets. In Canada, it's the third largest category. So again, what I want to point out here is this big dip. Naturally, that's going to be when the vape crisis hit, right? Thank you. Yeah, can you see my cursor as it's moving around? Okay, cool. All right, so we see this big dip and then we see sales start to rebound here. And then what happened is that we had another dip when the pandemic hit. And so what originally at this point of our sales, the vape market was making up about 20% of our sales at that point. And then, pretty quickly within a matter of months' time, it made up around 16% of our sales. And then we still continue to see a little bit of a dip. Things have since been starting to rebound, and we can see as that's happening right here. And so, it's back to being our second largest category of sales in California, about 20% of the market at this point. And a couple other interesting things that I'll call out on the vape market. So predominantly this market is run by full gram cartridge sizes. This makes up 2/3 of the market here in California. And we have been seeing a shift into the half gram package sizes. So that's becoming much more popular over the last year. And then the other interesting shift that we've been seeing is, traditionally it's the 510 cartridges that make up a majority of the market. But there's been a couple of big players that have come in and are making their own proprietary vape cartridges. So Stizzy is an example of that. Stizzy actually owns 70% of the market in California for vape sales, very big player. We're also seeing Plug and Play come into the market, and they're also having their own proprietary cartridge or battery. So that's something that we'll probably see some larger producers to continue to produce. Next slide. Okay, so this I thought was interesting. So this is what the vape market looks like by country. So US states are going to be in purple, Canadian provinces will be in red here. So I just wanted to call out a couple things on this slide. So number one, we see Pennsylvania makes up their market share for vape is very large. We see it's almost at 36% here. And that's because Pennsylvania has different regulations, being a medical market. So they don't have pre-rolls and edibles at this point. So naturally, we're going to see vape, flower make up a much larger percentage of their sales. But in terms of recreational markets, California is certainly the largest recreational market when it comes to vape sales. So just about 23 or 23% of our sales in the vape market right now. Next slide, Jay. Okay, so pre-rolls is another interesting category. So I mentioned at the start of the pandemic, we started to see some pre-roll declines in sales. And this was, again, like people are concerned about respiratory diseases. People aren't sharing joints as much. So we saw something that was really interesting that happened in the pre-roll market. We saw several large producers, Sublime Canna in Oakland, I'll use this as an example. They pivoted their business, and instead of producing just the 1 gram pre-rolls, they started doing multi-packs, which was really cool to see producers kind of shift so quickly. But the multi-pack, the dog walkers, right? It's like the pack of 5 pre-rolls. That has seen a lot of growth in the pre-roll category. This is happening across all markets. And then we're also seeing a lot of growth in infused pre-rolls. This has been happening over the last year. These are probably the 2 biggest things that I would call out with pre-rolls. And what was also interesting is that pre-rolls have been growing faster than the overall cannabis market has been growing. So we saw about 59% year-over-year growth versus the total market, which was growing at 54.2%. And then actually just yesterday, we published a really great report. I'll pop it into the chat box with some of our friends from Custom Cones, and they did a survey to 130 pre-roll companies. And then we paired that with some headset data, all the transaction data. And they were asking questions like, how many people are in your company? How much revenue are you making? What types of products are you producing? So this report gives like a really great snapshot of what's happening across the United States in all different types of pre-roll companies. So if you are a pre-roll manufacturer interested in that market, highly recommend checking that report out. Next slide. Okay, all right, so just last week we started doing forecasts. It's a 2-year forecast, but it's from 2020 to 2022. And this forecast is looking at, we're pulling data all across the US, so any legal market across the US, as well as all of the markets across Canada, all the provinces there. And so we had originally projected that by 2022 in the US, we would be doing about $28 billion in sales. But we've revised these projections. We're going to publish this quarterly, and we'll revise projections. Obviously, we're seeing a lot of new states come online here, so those projections are then going to be increased. And so what we're seeing here is the US in purple, Canada obviously in orange. We have just revised our projections to over $30 billion, given that we've had a couple new markets come online. And so in Canada, I think it's just important to still reference Canada being in the United States and just understanding what's happening in their market, given they're already, federally legal. So we didn't anticipate too many changes for them as a market, just because they're not having new markets come online. So they're going to be about a little over 5 billion. Okay, so in terms of category growth rates and what we can expect in terms of any shifts that we're going to see. So kind of as I outlined in slides prior of what California sales look like, there's not going to be too much change through 2022. So there's a couple things that I'll call out that we can expect. We're expecting a slight decline in concentrate sales. And then we're expecting a slight increase in vape and pre-roll sales. But in general, things throughout 2022 are going to remain as they are right now. So flower will continue to be the dominant category of sales. Vape will likely be that second category, and then edibles and pre-rolls. We're not going to see too much change in beverages. So again, I really like to call out beverages because I have a lot of sympathy and empathy for anyone making a beverage product, because it is a very challenging category to build a product in. And I just want to put that out there that we're not going to expect too much change in sales on that side. Okay, so some retail trends in California. Okay, so this is this is something really interesting that we're going to include in our CCIA accountability report that hopefully we're going to be publishing in just a few short weeks now for everyone to read. But one of the things that I found really interesting was we wanted to look at what the market share was by brand rank. So in California, our top 10 brands in the state are making up about 26% of our sales. And so what we see here, and I'll just kind of walk through this graph. So this 1 to 5, this is our top 1 to 5 brands in terms of sales ranking in the state. And so what they're making on average, and let me just pull up, I don't want to get any of these numbers wrong. So these brands are making as a collective 823 million, and this is over the last 365-day period. And so what that would mean on average, each of these top 5 brands is making about 167 million in the last 365 days. Now, when we think about the brands that are ranked in the 100 or above, collectively, all of these brands are making up about $1.3 billion of our sales over the last 365-day period, which would average out to about $1.3 million per brand. Now, without giving too much perspective on this, how I interpret this is that we have a pretty big differential in what a small brand makes versus what a large brand is making. I don't have any notes to compare it to in other industries, so other traditional retail industries. I'd imagine it's not too far off. Obviously large, well-capitalized brands are going to make up a significant portion of our market share, given how hard it is to run a cannabis company. But I just wanted people to understand the differential from, a large scale brand to some of the 100 or above brands. So next slide, please. Okay, so what we're looking at here, we did an analysis where we were looking at the number of products that the average retailer carries in their store across a bevy of different markets. And we wanted to do this because I'm sure everyone on this call has been into a dispensary, probably throughout many different states. And we see a lot of different things in different states. So for example, like one of the primary reasons we wanted to really look at this is because there are a lot of products on the shelves, a lot more in some states than others. Washington, for example, the average retailer in Washington, they were having as many products on their shelves as the average Trader Joe's. So this is a lot of different products. That's a lot of, products to manage. This means that we have a lot of, their licensing is also a lot easier than us here in California. So when we're looking at California, the average number of products that a retailer has on their shelves is about 700 different product SKUs. Okay, so let's go to the next slide. And one of the common things that we talk about at Headset on the retail side is, I don't know how many people are familiar with the 80-20 rule. We talk about this a lot at Headset. This is a very common principle that's also known as the Pareto principle, which just very briefly is this idea that has been studied from economists and sociologists but was originally started by an economist, an Italian economist in the early 1900s named Vilfredo Pareto. And he had this theory that in Italy, that 20% of the, or 80% of the wealth was owned by 20% of people. And so this theory developed over time. It's applicable to our everyday lives. It's essentially telling us that, 20% of our actions are going to result in 80% of a result or a cause. So we wanted to know, is that true in cannabis? And it is absolutely true in cannabis. It's not a steadfast rule that it has to be 80-20. It could be 30-70. But what this chart is saying, and so California, we're right here. So what this chart is saying is that 32% of the products are making up 80% of revenue. So now when we go to the next slide, what we want to think about, or what we wanted to look at, was like, okay, well, out of all the products that are on a retailer's shelves, how many of those have not had any sales? And so what we're looking at here is that 14%, just over 14% of products on the average retailer's shelves in California had 0 sales over a 90-day period. And so this is something really important, I think, to think about when we're in a market that is becoming a little bit more saturated. There's a lot of competition in this market. Anyone who is building a brand in this market or works on the retail side knows how difficult it is to get on a shelf, to kind of educate the consumers about your products, differentiate from the market. So what we're seeing is that, there's in the mid, compared to some other markets, inventory that's still on the shelves. I'll call out Oklahoma and Oregon and Washington here because their numbers are much higher. And I think that's because there's a lot more product distribution in these states. It's a lot easier to get a license in these states. There's a lot more licenses on both on, I guess, all sides, the cultivation side, the product manufacturer side, as well as the retail side. So that will be interesting to watch how this number shifts as we have more retail licensing available, which, just as a fun fact, we have just as many open and operating stores as Oregon does. We are a state of 40 million people. They are a state of 4 million people. So we need more retail licensing in this state for sure. All right, next slide. Okay, so some key takeaways. Cannabis sales are growing. The growth rates are not as strong as last year, but we are still growing. There's exciting opportunity across every market, particularly here in California. We're seeing a large amount of products on the shelves in California, and most of these categories are going to continue to see growth throughout the next year. And then there's really varied opportunities depending on kind of where you sit as a brand. So I think I got through that perfect with 5 minutes left. So happy to answer any questions. Again, Justin, like if we want to do a survey, I don't know what everyone here wants to know. So the more that I know, like, is the high level trends helpful? Do y'all want particular category dives? Are you more interested in the consumer trend piece? Then I can kind of tailor accordingly.
Yeah, absolutely. Thank you for that. And if anybody has any questions, definitely just throw it in the chat. We did have one from Megan going back to the slide about increasing and decreasing in sort of market share. And it did show that concentrate sales were projected to slightly decrease. Do you have an interpretation for that, or?
I don't have an interpretation for that in California, but I will say, on a personal note, my partner is running a concentrate company, one of the legacy ones here in California. And what he's always talking about is what we hear a lot of people talk about, a race to the bottom pricing. We're seeing some brands like Raw Garden, for example, makes up, significant market share in the concentrate. We're seeing Moxie kind of come into play here. It's really hard getting on the shelves as a concentrate company. I think a lot of brands are still trying to differentiate in market, and there's been this shift to decreased pricing. So we're seeing pricing, a race to the bottom pricing, as some industry people like to call it. So I don't know if it's because pricing as a whole is going down. So we can, maybe look into that more, or if it's just that people are buying them less. I'm not too sure.
Yeah, absolutely. And I guess just thinking out loud, when you kind of look at a chart that's a percentage of the whole, just because a percentage, it's a lower percentage of the whole as it was the year before, doesn't necessarily mean that sales gone down. Sometimes it means that everything else is catching up.
Yeah.
So I don't know if you're kind of seeing that as well.
Yeah. Well, that's exactly right in theory, just because, so we have to look at market share separate than we look at sales, right? So market share might be decreasing, but sales might be going up. And I'm actually going to pop in the link to a couple different reports so people can get them. These are all free, and we have one on concentrates that might be helpful. But here's the market projections that I just put in there. Again, these are some 2-year forecasts for us. And then this pre-roll report is really interesting for anyone interested in that market. But anything else?
Does anybody else have any questions?
Justin, I see a quick one that came into the chat about what the top 10 brands are. If you have any insight into that, Jocelyn.
Well, so actually on our website, and I'll pop this link in here as well, we have a bestsellers page. So you can just go see in real time. You can pick a category, pick flower, and then you can see the top 10 product SKUs. The top 10 brands, you can get access to our Headset Insights Pulse, which is free for a little bit longer, and it has some of that information there. If you want to know some of those top 10 brands, you can also hit me up separately, and I'll send you what that looks like. But actually here, let me see.
Great.
Some of this pulled up. So yeah, hit me up with that.
Okay.
And we should have a link on the website to most of the different things offered from Headset, especially the ones that you get at no cost and or discounted. So definitely take advantage of that member service and be able to really dive into some of this, because I know we had 20 minutes today, but it's something you can make a living off of, to say the least.
And Jocelyn,
Yeah.
we'll be sure to send you any additional questions that that we have. And if anyone does have any feedback on what you'd like to see in terms of data analysis from Headset and as a CCIA member, let us know. If we do send out a survey, I'm going to hold everyone on this call accountable for actually filling it out because we don't always have the best luck with those. But if you want to be able to give input, please do. It's we're really excited to partner with Headset on this increased member benefit.
Yeah. I think we did have one quick question if we have 1 minute.
Sure.
Leo asked, is potency versus price still a driving factor in most sales? Do you kind of see that?
I wouldn't say potency versus price. I would say potency and price is certainly the driving factor for a lot of people at this point, especially younger generations. I saw another question in here from Michaela looking for some consumer trends. So one of the things, potency versus price, the vape category in particular is a category that this is purchased mostly by younger generations. So as we start to see older demographic groups, you'll start to see the market share of vape sales go down for those demographic groups. So younger people are generally purchasing on price, on potency. I think this is also probably why we're seeing a lot of shifts with pre-rolls, and we're seeing those infused pre-rolls become more popular. That's obviously about increasing, the potency of those pre-rolls. And so, yeah, that's what I would say there. Dale, what proportion of sales are high CBD or alternative cannabinoids? I know you sent me a message on the top 10 brands. I can include some of that information as well. I don't know off the top of my head. But what I would say, I guess, just to close out on kind of my end, we have seriously a ton of free resources. We're always producing reports on different aspects of the industry. They're very easy to read, visually pleasing. I honestly, I'm not an analyst as by trade. So I'm studying our reports. I study a bunch of other data companies' reports. And you can just learn so much from these free resources out there. And it's not as labor intensive as you would think to follow the market. So, I just want to put that out there that we have a ton of free stuff for people.
Awesome. Thank you very much, Jocelyn. And yeah, we'll obviously be including a little data corner in a weekly insider every month for the foreseeable future. So you'll be getting some small bites of this as you're checking those emails and being active with the association. So that's it for the Headset piece. I appreciate it.
Thank you, Jocelyn.
You're welcome.
Appreciate you being on.